Perfect. Well, good afternoon, everyone. My name is Christopher Morris, one of the two co-founders of the Sustainable Ventures Group, and delighted that you can join us today. For your reference, this event is being recorded, and those recordings will be available by email for your reference, and of course, for those that are unable to join us today in person. As some of you might know, at this time of year, we typically run a wine and sustainable nibbles event at which we provide the opportunity for our investors to meet our existing portfolio companies. Clearly, that hasn't been possible this year in the context of the pandemic, but we're delighted nonetheless to be running these virtual Meet the Portfolio events. Today, we'll be hearing from Ben Patton of Good Club, Sean Peters of Dry Grow, Claudia Gwinnett of Circlar, and Robert Pell of Minviro. And I'll be asking each of our panelists one or two questions about their business, the impact of the pandemic in this most interesting of years, and their plans for the future, before we then open up proceedings to the audience using the Zoom chat function. Do feel free to drop your questions through at any point and direct them to everybody in the group if possible. And once we get to the Q&A section, my colleague Irena will be moderating and putting those questions to our group of panelists. Firstly, though, I'd like to say a few words about Sustainable Ventures and our Accelerator program, if I can be successful in sharing my screen. Irena, can you confirm that is working from your side?
Yes, full screen.
Perfect. So Andrew Wordsworth and I founded Sustainable Ventures back in 2011 with a shared vision of the world in which the twin challenges of climate change and resource scarcity are addressed by commercial solutions. We operate, as you can see on the right there, across 5 key clean tech and sustainability verticals, covering food and agri-tech, mobility and future transport, future energy systems, building technology, and the circular economy. And we provide a variety of different services to early stage ventures operating in those areas, including flexible workspace and support in key areas, including product and service design, branding, accounting, R&D tax credits, commercialization and sales strategy, and of course, fundraising. We really do aim to be a one-stop shop supporting the next generation of clean tech innovation in the UK. To date, we have launched 8 businesses of our own, invested through our accelerator into 22 more, provided workspace to more than 60, and supported over 200 through one or other of our support programs. Over the last 3 years in total, we've engaged with more than 1,000 UK-based startups, all playing an important role in driving the UK towards the low carbon economy of the future, whilst hopefully delivering an uncompromised return to our investors. We are now raising investment into our 4th Sustainable Accelerator, but our investment thesis remains largely unchanged. We aim to invest into and accelerate the development of a diversified portfolio of SEIS and EIS eligible startups across those 5 verticals. We believe that our approach de-risks each investment with specialized support, deep sector expertise, a diversified portfolio, access to non-dilutive funding and tax relief to minimize downside, and investments that are timed to take place just before key value inflection points. We've run 3 accelerator cohorts to date, investing between £800,000 and £1 million a year across 7 to 8 investments, with a heavy weighting of approximately 70% of those proving eligible for SEIS relief and the other 30% eligible for EIS. Those businesses have secured a further 24 million in follow-on funding and are currently delivering an unrealized tax-adjusted IRR of between 30 and 40%. As I mentioned, we're currently raising our 4th fund on the Cedars platform. That opened in October, and we anticipate to close in the coming weeks. We've already secured £630,000 and anticipate a total raise of between 800,000 and £1 million now. We already have a short list of nearly 100 investment prospects, and we'll be commencing engagement in earnest before the end of this month with our first virtual pitch day. And we expect to close our first investments in Q1 of next year. Once again, we're really excited by the caliber of the opportunities that we're seeing and really can't wait to get started. We're running online engagement events like this on most Thursdays between 5 and 6 p.m. And next Thursday, on November 19th, the other members of the investment committee and I will be hosting. So please feel free to join for that if you'd like to give us a grilling personally. Today, though, the focus is on our existing portfolio. And I'm delighted to welcome Ben, Sean, Claudia, and Robert from across our first 3 cohorts to tell you a bit about their entrepreneurial journey of late. So, ladies and gentlemen, welcome. I will now turn this off, so hopefully you can see all of us. Perfect. So I'd like to start by asking each of our panelists in turn, very quickly, in 60 seconds, to introduce their venture, focusing on the climate change or resource scarcity challenge that they address, and how they are differentiated. And I think, first of all, I'd like to go over to you, Ben, if that's okay.
Yeah, great. Thanks very much. Hi, everyone. My name's Ben Patton. I'm the CEO and one of the founders of Good Club. We are an online retailer, and just to give you a kind of bit of a feel for our service, we sell about 2,500 household staples. Our membership is around 5,000 people, and our revenue at the end of this month will be around 3.5 million on an annualized basis. What we're trying to do, though, our mission really, and where we position ourselves, is to make sustainable living accessible to more people, because really what we all need to do is scale demand and production for sustainable living. So that's what drives us. I think in terms of climate change and resource efficiency and sustainability generally, they're at the heart of everything we do, from the products we list to the way we deliver them. But if I was going to pick one thing out in particular as our sort of unique proposition around sustainability, it's our new zero waste service. So this will actually be available to all of our members from next week and to all new members from after Christmas. What this means is that we're sending out all of our orders in returnable boxes, initially with a range of 65 products in refillable pots. And everything goes out via the courier service with us, but what we'll now be doing is recovering all of the delivery boxes. So at the moment we send out cardboard boxes, as others do, via couriers, and while those are recyclable and made of sustainable materials, there are huge carbon and packaging savings by retrieving those from customers, as well as the product containers, and reusing them. So just to kind of give you a sort of summary, with our projections, we'd hope to save 4,000 tons of carbon in the next 5 years by using these returnable boxes. So yeah, is that good, Chris? Is that?
Yeah, that's fantastic, Ben. Thank you, and really exciting to see how Good Club has gone from strength to strength this year, and look forward to hearing a bit more about it later in the panel. But first of all, same question to you, Sean. So 60 seconds to introduce your venture, focusing on the climate change or resource scarcity challenge that you solve, and how you're differentiated.
Sure, no problem. Thanks so much, Chris. And hi, everybody. Thanks for hosting this event. Great to be with you all, even in these very unusual times. So I'm the CEO of Dragro. Dragro is an agriculture technology company, first founded at Oxford, that has been working on ways to grow animal feed protein much more sustainably than the market standard, which is soybean meal. This is important because we're adding 2 billion people to the planet, and those people are eating a lot. So when we talk about feeding the world of 2050, we necessarily need to look at what crops are going to expand the most. Soybean is the crop, the single crop that will expand in land use and volume more than any other crop in the world. And this is a major challenge because most of it's supplied in just 3 countries, and it's associated with deforestation in Brazil, and this is a problem. So we've been working on a way to grow an alternative for the same use case that can be grown using 99% less water and 8 times faster. And the cool thing is that it can also be grown in arid places so that we don't require this incredibly long value chain. We currently have operations in Kenya, partnerships with 5 universities, as well as the European Space Agency. So this is really a community coming together to try and solve a problem. I think we're part of the 2016 cohort with Sustainable Ventures. And really glad to be supported.
Thank you very much. Lots of questions for you, but I'll hold fire for the time being and ask the same question to Claudia of Circler. So 60 seconds to introduce your venture, climate change challenge that you solve, and how you're differentiated.
Yeah, hi everyone. As Chris mentioned, my name is Claudia Gwinnett and I am the founder of Circler. So at Circler, we have a very, very simple goal, and that is to transform the packaging of home, beauty and personal care products from single-use and disposable to durable and reusable. I think, it was probably fairly obvious to everyone, why we're tackling this. The plastic waste crisis is one of the most defining environmental issues of our time. UK retailers are producing an enormous amount of packaging waste every single year, and only 91% of that is recycled. And whilst there's been lots of innovation and changes of materials, the real answer to this is to change packaging from being single use to being reuse. So how do we do this? Well, we have been on a bit of a journey, which I think we'll get into a bit later, but at the moment we are also an online retailer. We're focused on B2C, and the best way to think about us is the milkman, the modern milkman, with products that smell a little bit better and that you don't pour over your breakfast but use in the shower. So we partner with an incredible range of independent brands. We are very, very selective with who we work with. They get delivered to our customers with a emission-free delivery service. At the moment, we have just rolled out our service actually as of today to all of Zone 1 and Zone 2 of London. Customers can use the products. When they're finished, we pick them up, come back to our Circler head office, and they get cleaned and ready for reuse.
Fantastic. Thank you very much, Claudia. And same question to you, Robert.
Great, thanks. Yeah, so my name's Robert Pell. I'm founder of Minviro. We're a spin out from University of Exeter, Camborne School of Mines. And we are a technology and consultancy company focusing on reducing the impact for mining and metals. This is a really important challenge to solve because the transition to a low carbon economy means that we're going to require significantly more of certain materials. So the World Bank suggested that the demand growth for lithium, cobalt and graphite is going to increase by 500% by 2050. So we're supporting these new projects, making sure that they are designed in the most efficient way possible, minimizing the climate change impacts, but also, from a different perspective, not working with the mining companies, but working with the OEMs and the downstream users or other stakeholders, and understanding what the impacts of these raw material supply chains are using life cycle assessment approaches. And we do this in a couple of ways. So we do this with consultancy. So we're an expert. We've got a team of experts, of engineers from different backgrounds in mining and mineral processing. But we've also developed a software tool that puts the life cycle assessment environmental quantification tool into the hands of the mining companies themselves, so they can make environmentally informed process decisions at projects.
Fantastic. Thank you very much, Rob. As always, really inspiring to hear about the impact that you're all having and the commercial potential that you have in front of you. My next question is one that, frankly, I unfortunately have to ask in the current climate. And that is, how are you faring under the pandemic and the related social and commercial restrictions that we're all operating under? What impact has COVID had on your business, and how have you adapted? I think I'll first go to Sean with that question, if that's okay, to mix it up a bit.
Sure, no problem. Yeah, I mean, COVID is a challenge for any startup, especially when resources are usually slim, team sizes are small, timelines are tight. We were really fortunate that we were able to close an investment round just as COVID started getting exciting. So that meant we were, this was back in, closed in March and announced in May of this year. So just as things started to pick up, we had closed some extra cash to expand out the team and hit some milestones, which of course were immediately adjusted as we settled into the reality of this global pandemic. We have operations in Kenya, and most of our major milestones are coming from that site right now. And so previous to this, we were flying back and forth from the UK to our site in Kenya. We had about 18 staff there, but our more senior plant scientists and engineers were, based in the UK. And so suddenly we weren't able to fly back and forth. So that was the first major challenge we faced. And we got around it by basically hiring additional talents in Kenya to support the team there. So this gave us, at this point in time, we have a much stronger team on site than we expected to, which is great, sets us up really well for 2021, but has increased our burn and our milestones are delayed. So while this hasn't affected us this year, we've been able to respond well, I think, and have really set ourselves up from a strong position which to launch into 2021. As we come up to our next investment round, we were hoping to get a little farther in our construction and hit a few more milestones, and those sadly will have to be adjusted. So I think, we made the best of a tough situation, but of course still not completely unscathed. The last thing I'll add here that was, I think an interesting point here is that we had day labor that were paid on a daily basis that were not on salary in Kenya, and we realized as we were coming into the pandemic that they were not supported in a way that would allow them to confidently not come to site if they started to feel ill. Now, in normal times, this is a challenge of that kind of labor market, as a whole. But in the times of a global pandemic, this is a major challenge, especially at a time when we wouldn't have the same level of oversight from our top co in being able to visit site frequently. So we came together as a team and we talked about what to do about this. Some of the advice we got was to simply cycle through our day labor so that none of them had the opportunity to get too familiar with the operations and figure out ways to steal and things like that. We actually took the opposite approach. We brought everyone on staff, gave everyone healthcare, made everyone a part of the team, started upskilling some of the day labor that didn't have special skills, and it's paid off in spades. We haven't had a single incident of theft on site since we did this, and pre-COVID, we were actually dealing with occasional incidences, small scale, but something we had to constantly watch for. So we've been really fortunate, I think, just to think about what a good company would do in this situation. How can we best take care of our people, and that's really paid off for us.
Great. Well, that's brilliant to hear, Sean. It definitely sounds like the more forward-thinking option of those you had in front of you. I certainly am of the opinion that the ventures we're working with that are best positioned for the future are those that absolutely have adapted to the pandemic. You've had to, but haven't let it dictate their future strategy, have positioned themselves to make sure they're ready for the new world, not just this one. And it sounds like you're in a better position than ever in terms of your organizational structure. Same question then for Claudia. I know that as you mentioned, it's been a bit of a journey for you through 2020. So why don't you give us a little bit of a flavor of how the pandemic has impacted you and how you've responded?
Yeah, sure. So if I go kind of rewind us back to kind of March, April time of this year, Circular was actually a focus on B2B and in particular on the hospitality industry. So if you think about all the toiletry amenities that you get into hotels, there's obviously a huge amount of waste, but also if you look at it from a business model perspective, it's much more scalable potentially, just if you initially think of it kind of from a logistics perspective. And in April of this year, we were actually due to launch 3 pilots in 3 leading independent boutique hotels. Obviously, they were cancelled. This was incredibly stressful, as we had obviously all our products ready kind of to go live. So besides kind of saving myself from a divorce when we had thousands of bottles of shampoo in my living room, yeah, COVID was interesting. But I think what it did do is, we had always had the view of exploring the consumer potential, and what we just did is accelerated that just so much quicker. So within a couple of weeks, we launched an online store. We packaged up all those products. We sent them out as kind of mini self-care boxes that consumers could buy. Yes, it was very sad to have to let go of the refill element of the company, but it was really a case of we needed to recoup back as much of our cost as possible so that we could sit and think, how do we do this and how do we launch? It was incredibly successful. We sold over, well over 1,000 boxes. I can't really do the math quickly in my mind right now about how many products that was, but what it did set us into a really good position was that we could pivot into our new model. So over the summer, I launched a home delivery refill service in my local area. So I'm based up here in North London. That went really, really well. We got lots of great customer feedback from it. And then following on from that, we've taken the last 2 months to really understand how do we build that out as a business? It's much more, obviously, it's COVID proof compared to our hotel model. And as I mentioned earlier, just today we've done the soft launch of our new service, and we're going to be rolling it out kind of with a big email, social media campaign from tomorrow and over for the next few months.
Excellent, exciting stuff. And I will ask the same question in a moment to Rob of Minviro, but just before I do, just a reminder to our audience, please do feel free to start asking your own questions directly into the chat function, so we can make sure that those are ready to go to our panelists in due course. Eventually you'll get tired of listening to me, I'm pretty sure. But first of all, over to you, Rob. Same question. How have you been impacted by the virus, and how have you adapted?
Yeah, so I think similarly to pretty much every company, having to adapt to remote working with the team. So we brought on some new staff a few months back now, and obviously there are challenges associated with teaching them about the approaches that would be used in any company. So we've really had to adapt to improving our communication remotely, and having really clear, softwares to allow us to deliver projects and the like. But in terms of our business has probably actually increased from COVID, quite contradictory to many sectors. And I think one reason for that might be that OEMs and other companies that really are big buyers of raw materials they've been affected by COVID supply chain impacts. They're re-looking at their supply chains, and now they have a greater emphasis on sustainability within this. And so this is putting pressure on a lot of raw material mining companies and refineries to actually quantify impacts, because now that's demanded by the downstream. So it's quite converse that it's actually probably had a sort of a bit of a bump in terms of a positive effect, in terms of more interest in applying life cycle assessment and life cycle thinking. So yeah, that's quite unusual for us, but there's definitely been challenges in like getting our team to work smoothly and effectively when we're apart from each other.
As you say, those are challenges that are shared by, I think, almost every organisation across the world, all adapting for sure. But delighted to hear that the impact has been to some extent positive in terms of your sales pipeline. You're certainly not the only organisation that has reaped some benefits from the current climate. And on that note, I'll put the same question to Ben from Good Club.
Yeah, I mean, we're an online grocer selling household staples, so it's not been all bad news for us. It was quite chaotic initially because we had all of our operations outsourced, and the outsourcer ran out of capacity quite quickly. So we had to move to a new warehouse and build warehouse tech. Get staff, lease a warehouse. I mean, in some respects, it was a good moment to do that. It was part of our plan anyway. So it brought forward quite a lot of our plans. We actually initially we were due to run trials the week the first lockdown was announced for the returnable boxes. We were going to have our first trials then of the whole service working. So it sort of knocked a few things out of joint. Obviously, we started our fundraising as well in the first week of March, and all of the conversations we were having with institutional investors kind of had to go on the back burner. I mean, in the end, it was a successful round, but it wasn't quite what we'd anticipated. But yeah, I mean, I guess lots of opportunity as well. It's a time of real change. I mean, we've been sort of clear beneficiaries, but I suppose it feels like sustainability's come back up the agenda furthermore with the good news from America last week, and so yeah, it's a time of opportunity, I suppose. It is a lot of disruption, but it's also a time of opportunity for everyone in sustainability, I think. And hopefully the impacts that we've had won't last for too much longer. The other big thing, I suppose, has been remote working, but again, that's I suppose brought some benefits as well, in that I guess what we found difficult was hiring people, bringing them in, and then working with one another when we'd never really shared much time with them in person. I mean, we hired 5 people without meeting them in person, but we did manage, there's a bit of a window in August where we did manage to meet up a bit. So we sort of bonded a bit over that time, and it's been a very busy time since the summer, but we've been able to work well because we did that. And I guess because there's a very good remote working culture from the tech team, that's really helped us as well. Just a really good habits and processes around very carefully detailing work to be done and priorities and so on and so forth. And so yeah, it's been an interesting period, but we've emerged okay.
Indeed. Well, I certainly agree with your comment on the general attitude towards sustainability more generally across the world in the context of the pandemic. It sometimes feels at the moment that with coronavirus, Brexit, political shenanigans in North America and so on, that there isn't an awful lot of oxygen left for any other topics of discussion. But I think sustainability is probably the one exception to that, and it hasn't really dropped down the totem pole at all over the course of this year. Ben, one quick question for you before we kind of move on. Just encouraging you to kind of blow your own trumpet a little bit. Could you give us some indication of how your kind of monthly turnover, your monthly sales has kind of changed over the course of the last kind of 9 or 10 months?
We've grown 5 times since March. So, and we were doing quite well before then. We were kind of on track with our targets, but yeah, and it hasn't been totally straightforward either, because opening the warehouse was really difficult. But yeah, it's been really quick, and actually, I suppose what's really heartening is I think that there was a temptation to be sort of really lulled into just thinking we'll just continue to drive sales through COVID, but we decided to focus at the end of the summer on rolling out the zero waste proposition to all of our customers, and we can see now that that's really driving sales for the remainder of the year. We're only marketing it on a test basis at the moment, but the results we're getting are really good. There's a huge demand for services that are trying to take packaging and unnecessary carbon out of the supply chain.
Absolutely, and I certainly think it's important for businesses like yours that you don't just make hay while the sun shines during this period, but you are building for kind of sustainable high levels of sales, and it certainly seems like you're positioned well for the future. Irena, I have a large quantity of questions I'm happy to carry on putting to our panelists, but I don't know if there are any that are coming in from the audience you think it might be appropriate.
Yeah, we have one question coming in, which I guess is a bit of a follow-up question to kind of COVID, but so here, how have you prepared for winter lockdowns going into the current one? And do you feel better placed, kind of pivoted towards a COVID concurrent world? And I guess we can go around again and see how each company feels about this. Maybe we can start with Claudia.
Yeah, sure. I mean, so as I mentioned, I mean, I feel, very comfortable actually going into, well, we're obviously in a second lockdown, and really that's because our model is, people are at home, so they're kind of online as well. So, those are two massive tick boxes, and people are just generally really interested in discovering new types of stuff and have kind of more time to engage. So from the actual business model side, we're set up for COVID. We do contact-free deliveries. So from the operational side, I'm, very, very comfortable. I think, from a consumer side, it's just a case of, now being able to kind of grow the business model. So, we've just obviously just recently launched, and it would, it'll be interesting to see, obviously what the full take up is. We've been running a wait list, which has been really, really successful. And, obviously in the future, it will be a case of looking at, when and what would be the right time to revert back to our, to our B2B model. But at the moment, we've rebuilt Circler with revenue we've generated, which makes me feel, really comfortable. We've got through to the final stages of a grant, which I think will be able to make a lot of changes and scale us up. So, but from a business perspective and how we've set up, I'm pretty good about it.
Thank you, Claudia. And maybe we can ask the same question to Ben now.
Yeah, sure. I mean, the one thing that we wanted to do before this lockdown, which has been important, really was to build a bit more resilience into our supply chain. So clearly a big thing for our customers is reliability, knowing that they're going to get the products they've ordered, knowing that there's enough loo roll and flour, etc., etc. So we've, a lot of what we do is just in time, and there are great efficiencies that come with that, and that's really important. But we've built a lot more resilience into our supply chain with new suppliers, some dynamic stock holding, further integration with the wholesalers we work with. So that's been one important action ahead of COVID, I guess, ahead of the winter. I don't know if there's any. Yeah, I mean that's really the main thing. Yeah.
Yeah. No, thank you, Ben. You replied well to the questions, and I guess then moving to Sean, how you're preparing for the winter lockdowns.
Yeah, for sure. So for us, the big hit really came earlier this year as we had to figure out how to adjust, per our previous logistical challenges. Now that we've handled that, we're pretty well equipped on both sides of the pond, and we're all working remotely anyway, currently on at least this side of the pond. So after now that we've taken the delays that we've had, I don't actually see any significant challenges going into Q1 of next year. We've kind of made the adjustments that we needed to make. That said, Kenya right now is increasing its COVID numbers. We were really hopeful a few months back that they may have been sort of missed in the global spikes. Those numbers are only now starting to spike. Now it's summertime there, so it's not winter related. So it's a bit counterintuitive. We don't know what that means. Thus far, we haven't had to close down site, and we've had no documented cases. We do temperature checks, and the front gate to site and all the rest. So we've been really fortunate thus far. that may change. So we just have to be reactive there. But outside of that kind of reactive scenario, we're feeling pretty confident.
Thank you, Sean. And last, Rob, how is Minviro preparing for winter lockdowns?
Right. Yeah, well, I think it was a real opportunity to have, a little bit of period of time to work with the team directly and plan for such an event and have systems in place for how to manage these projects. Another thing that I think we've probably adapted to is that considering that you can have these unforeseen events. So one thing that's analogous in the mining sector is the boom and bust cycle of raw materials that happens every so often. So we've understood that and tried to expand our offering into slightly different areas to ensure that we are able to offer this even in the cycles of the mining and metal space.
Thank you. Then we have other questions kind of coming in. So one is about kind of accelerator support during COVID and if and how the Sustainable Accelerator has been able to support you through this difficult year. So more just for the audience to be aware of, so the companies on the panel, so not all of them would have been in the 12-month Sustainable Accelerator during this period. So actually CERCLA was in the accelerator until the end of July, and then Minviro started accelerator support from April. So I think I will let both companies in the accelerator kind of reply to these questions, although we provide wider community I think support programs, and we've been very active at communicating all of the kind of government support to everyone and all of the alumni companies. So if Sean and Ben want to, as well contribute to this question, please feel free to jump in. So maybe I will ask kind of Claudia to.
Of course, but say that.
Yeah, sure. So I think I'm obviously a single founder, so being on an accelerator program is even more important potentially when you're kind of doing it alone. And I think the biggest thing for me was, especially initially, was a kind of sounding board to be able to understand what the various options were. There was a real moment at the beginning of just kind of panic. Obviously we had all the stock available, what we were going to do. We weren't a consumer facing business, and there was a real period of time while we'd recouped back some of our costs, and Sustainable Ventures held a very, very kind of successful kind of strategy innovation session. I mean, it was a bit strange to do it online, but it worked very, very well. And it was really to just to take a step back. I think when you're in the meat of your business, it's quite hard to kind of come out for breath and be able to look at well, what are the options, and I think it was from that session really that I took away to say, okay, let's trial this pilot. The risk is most probably lockdown's not gonna, we're not gonna be in the clear of COVID by the summer, and there's a potential to come back. So let's park the hotel model. So I think that is probably the biggest support. I think, other than all around that, this year there's been an enormous amount of grants and, various other opportunities. And I think, Sustainable Ventures are absolutely fantastic at being able to kind of tap into their network to, to find you help, whether that's, a grant that might be appropriate for you, connecting the community still whilst you've been, all working remotely. And then I guess the last bit for me is completely changing your business model to a consumer model. It's completely different. Your margins are different. Your business model is different. How you're going to fundraise is different. And they've been absolutely invaluable to me to be able to kind of navigate that over the last few months.
Thank you, Claudia. And then I guess I would like to ask the same question to Rob from Minviro. Started our accelerator from April this year, so in the middle of lockdown.
Yeah, I mean, so first and foremost, the communication about the opportunities that were available for companies like Minviro was really clear and quick as well. So that's something that's obviously very, very useful during this sort of year. But more generally, like the support has been really helpful. Like for example, developing a pricing strategy for our software offering. That was really helpful insight that, really helped sort of crystallize our ideas about how to generate the most value out of that. And also introductions to a number of relevant contacts. And also, again, supporting with grants that we've applied for, or advising on what grants might be suitable for us to apply for. Yeah, and it's really just helped us. I suppose me personally as well. It's really helped me having the regular updates and conversations. It's been helpful to keep the focus on the right things, at the right time. I think that's something that's really helpful, having those regular meetings to update.
Thank you, Rob. So unless Sean or Ben want to add anything, I think I can move on to the next question that is actually for Ben. So it's basically, I guess, kind of comparing Good Club to a company in the US called Thrive Market. That's been very successfully raising apparently 250 million in funding. And then asking whether Good Club business model is aligned to Thrive Market, and where do you see an opportunity to learn from the setbacks that this company has faced?
Yeah, sure. I mean, I guess they've had more sort of good times than setbacks. But I think the first thing I'd say is is just to share a little bit of our worldview on how the groceries market is going to evolve. And I won't spend too much time on it because it's not really relevant to everyone on the call, but it's sort of relevant to how digital disrupts a number of different spaces. And, I guess while the incumbents, the kind of 20th century retailers, they all built from their geographic proximity to their customers, providing something roughly the same in pretty much every area at a slightly different price point. Whereas the sort of food and beverage propositions of the future are really aligned to the values in a much more detailed way of their audiences, much more tailored and perhaps tailored to specific meal occasions, or in the case of HelloFresh and Gusto and services like that, or I guess something that you might see as not competing with retail like Deliveroo. So that I guess we feel like we're on the wave of quite a lot more disruption in groceries, and obviously COVID's accelerated online by a number of years. Thrive are really interesting for us, and have been a source of inspiration in many ways. I guess the thing that we look at is how sustainability, which is really in many respects a subjective concept, it's different to different consumer groups. And in the States, there's a real emphasis on health and a real emphasis on organic. Actually, organic's grown massively in the States in the last 10 years. But I suppose packaging and the footprint, the sort of carbon footprint around delivery is less of a priority for US consumers. That's not totally true. But if I look in different geographies, you kind of see some similar propositions in different places, but they tend to have a different they provide a different priority around sustainability attributes depending on the local audience and what's important. And I think for UK consumers, waste and packaging and plastic waste are really important issues. So they're very important to all of us on the team as well. And so that, that's why that's been such a central part of our strategy and what we're trying to do. But we also, there's lots of things that we share in common, the importance on sustainability in production, making products, sustainable products, accessible and affordable to people. So yeah, that's probably enough from me on that, but I hope that answers the question.
Thank you, Ben.
So I'd like to jump in with another quick question, if that's okay. Obviously, the news that we've all received recently regarding the potential for a vaccine is very encouraging. Nonetheless, I think it would be pretty foolhardy to assume things are going to be rapidly returning to normal over the next kind of 6 months. That said, putting COVID to some extent to one side, I'd like to ask you all more generally about your plans for the next 12 months, and in short, what you see as your kind of greatest challenge and your greatest opportunity. I'd like to go first of all to Sean with that.
Greatest challenge, good question. So we're planning to do a bridge round in 2021, and raising capital is always making sure you have enough capital is always one of the biggest things on any CEO's mind. So I would have to say that, because raising in a pandemic, I imagine, is going to be tough. Fortunately, we have a pretty great list of current investors, and we've spent a lot of time trying to build relationships with additional investors over the past year. So I think we're coming into a good position there, but it definitely, despite some of the wind at our tail, there's many headwinds as well. So I would say that is probably the biggest challenge we're looking at in the coming year. Biggest opportunity is that the markets that we're trying to address is a massive sustainability challenge, but it's also quite a large potential financial market as well. We were worried, worried is the wrong word. We were not sure what would happen with COVID in terms of projections around the problem we're trying to address. If the problem sorted itself out through COVID and other adjustments in the market, then from a sustainability position, that's great. From an investment position in our company is not so great. And so that was something that, affects all of us, and we were paying close attention to. We're in this to solve the sustainability problem. So we'd still chalk that up as a win and find other things to do, but it'd be pretty shaking. What we found is that while there was a slight dip in decrease over a slight dip in the increasing growth over 2020, that is expected to pick right back up in 2021 and continue, such that our market size is increasing by 18 billion with a B between 2020 and 2030. And that's post-COVID adjustments. So I think that is both a challenge from a sustainability perspective, because this is a nightmare. I think it's something that we definitely need to solve as humanity. But it's also a huge opportunity for those who are trying to solve this, in the same way that wind and solar are opportunities for the oil energy gap is an opportunity for wind and solar companies. So we see it similarly, both a major sustainability challenge, but also a financial opportunity for those playing in this space.
Fantastic, thank you, Sean. And Rob, would you mind answering the same question? Yeah,
of course. So over the next year, we're looking to deploy our software solution. So we're in the stage of validating our tool with customers that we have, that we've carried out consultancy with as well. So that's like the big objective this year, and to get our first commercial sales from that. I think our biggest challenge is actually being caused partly from our growth and success in the consultancy space, that we've been one of the first to enter this market of carrying out these life cycle assessments for technology metal projects in development. And the demand is growing every day on this data for these raw material projects. So it's likely that in any new market, it's inevitable that you'll get competitors coming into this space at some point. And so the biggest challenge is to make sure that we stay ahead in terms of our technology and our consultancy work and quality and understanding within these sectors. And I think we're in a very strong position to do that. But also, part of the solution to that is having our software tool as well, which is would take a long time for those competitors to come into the market and replicate. So yeah, that's probably our challenges.
Perfect, thanks, Rob. And I think we do have some more questions coming in now, but very quick, same question to Claudia.
Yep, sure. So I mean, we see a huge opportunity. I think when I look at the next year, our real focus is just is to get the model really right for zone 1 and 2 of London. That's, our model fits perfectly well in highly dense metropolitan areas because it ensures that our logistics is pretty smooth and we can get kind of leverage like last mile delivery services. I think, we're one of the, we are the first company who's got the same model as us for the types of brands, and for a lot of the brands we have an exclusivity on with them. I think one of our greatest challenges is, the business model, makes sense. Our greatest challenge now is to how to make sure that we can really deliver an enormous amount of impact. And I'm not talking from a commercial impact, I'm talking more kind of from a sustainability impact. So we've obviously got to focus to, reuse our packaging, and, the biggest opportunity and challenge is, is getting the right investment to be able to put our bespoke packaging into production, which will kind of lower not only our margin but also greatly increase our environmental impact. And alongside that, we've got some kind of quite big plans around how do we streamline the cleaning and the filling process, which reduces, again, quite a lot of both operational costs and environmental impact. So both huge challenges because they would kind of give us a real edge, but also huge opportunities.
Chris, you're on mute.
Almost got through an entire session without doing that. I think, Ben, we've to some extent already covered your kind of key challenges and opportunities through the earlier questions. But I think, Irena, we've got some others coming in. Is that right?
Yeah, we have a couple of questions. So the first one, it's about how SV or discover each company, or how each company discovered SV. And then really asking which sources of funding the companies looked at and why you went for SV. Okay, great.
Well, I'm first part of that question, and then we can put it to the panelists for their thoughts. So I think that the short answer is from a very wide variety of different sources. This will be our fourth accelerator coming up. So we are in a position now where we get quite a large number of inbound applications. We've got, I think, already somewhere in the region of 100 for our fourth cohort, and we only opened the application process a little over a week and a half ago. So we do get a lot of inbound opportunities. We also work with a large number of leading academic institutions, including Imperial, LSE, Oxford, Cambridge, and others, and see quite a lot of deal flow through there. As well as through investment partners. We work with a number of the leading angel networks, including the Green Angel Syndicate, and other early stage institutional investors. And finally, with quite a lot of the innovation funding organisations, including those deploying direct funding from the UK government, such as Innovate UK. So a fairly wide variety of different sources for our deal flow. But I'd say we're now in a position where there aren't many early stage opportunities in this sector that we don't have eyes on at some stage. So we are in a position where we can be really quite selective with our investment decisions. But I personally would also be really interested to hear from our panelists regarding how they found us and why they took funding from us. So should we direct that first of all? I guess it was longest to go to Sean at Drygrow.
Sure, no problem. So we had raised some grant funding from Innovate UK in our early days, and we're looking to backstop it with some market capital so we can actually access the grants. And we started looking around for those that were interested in the kind of thing that we were doing, and we just kept hearing over and over about this team that was doing some really good work in this space. And so I sat down. I think I met with Andrew Wordsworth and Peter when we first connected. We sat down, we started talking about what we were up to and our vision and some of the things that they've been involved with in the past. And so much of meeting with investors is not just about finding capital, but also finding fit and vision. And I think that's something that was shared in spades here. So that was sort of the start of it.
Great, good to hear. Thanks, Sean. We'll move on in chronological order then, I think, to the other representative from our first cohort in Ben of Good Club.
Yeah, sorry, I was on mute. I'd known Andrew from quite a while back, and I'd heard about what you guys were doing, and not just the investment, but the community you were building. Most of the meetings we were having when we were first talking about it, someone mentioned sustainable ventures, and it's difficult to put a value actually on that and the people we've met via sustainable workspaces. And I think also it's probably evolved a little bit since then, but yeah, Sustainable Ventures has done a great job in helping us and others explain the opportunity in sustainability. I think it's maybe better understood now, but that's been helpful. We feel very lucky to have been invested in by Sustainable Ventures.
Well, I think maintain that growth, and our investors will also feel quite fortunate to have been involved with you, Ben. Moving on in chronological order from our second cohort, Claudia, why don't you say a little bit about how you came across this and why you accepted?
Yeah, so I actually came across Sustainable Ventures. I met Chris at a hackathon, actually. At the time, I was still in my corporate career. I had worked for nearly decades at Barclays. I had the idea for Circular and pitched it at this event, and our kind of conversations kind of grew from there. I think for me at the time, I was really looking for the right level of support. Obviously this is my first company that I was going to found. There was, skills that I obviously, had, but there were things that, I also didn't have experience with. And I think when I, looked at various other accelerator programs, for me, it was the kind of the actual accelerator that came with the investment that I think drew me to Sustainable Ventures. And I think also having people who really understand what your vision is, I think is the most important thing, and are truly kind of equally as obsessed with your mission. I think then therefore they can kind of understand the challenges, and also have the patience around, as you build your business and why it might be a little bit slower, perhaps.
Great, thank you, Claudia. And finally, Rob, as one of 7 investments that we actually closed since the beginning of the pandemic. Obviously a slightly different kind of perspective from you perhaps, but the same question.
Yeah, so my situation was similar to Sean's, where we'd got through to an Innovate UK competition sort of section with the iCure program. So we were looking for match funding for that particular grant. And it was actually Kangzen Liao, who's actually on the call. It looks like he's on the call today, who was from E4 Tech, who suggested Sustainable Ventures. And then after having conversations with a number of the people at Sustainable Ventures, it was similar philosophies of driving sustainability within these sectors, and also the opportunity to work in a community which is passionate about sustainability was really important for me. So yeah, that was my decision.
Perfect. Thanks, guys.
Yeah, thank you. I think we're running out of time. So I think the last question that we had from the audience was around the impact report, and I've written to Leo that I'm very happy to share the impact report, so you can see all of the details of all of the companies in the portfolio. Perfect.
Perfect. Thank you, Irena. Well, many thanks to all of our panelists for sharing their inspiring stories and some really useful insights, I think, from a quite remarkable year so far, the one that seems to be ending a little better than it started. If you'd like a direct introduction to any of those that participated today to learn a little bit more, please do reach out. Equally, if you want to hear more about this year's Accelerator and how you can get involved, do feel free to reach out to us. We are now in the closing stages, so if you'd like to invest and join us on the journey for our 4th cohort, please do so as soon as you can. Otherwise, thank you all for joining us, and have a marvelous Thursday evening.
Thanks again, everyone.
Cheers. Thank you, guys.
Thank
Thanks
you.
all.
Bye.